Welcome to our second panel discussion. We're going to jump from banking regulation to growth. My brain is full of Basel now, so I'm going to try and move on. But really delighted to welcome a really impressive team here to discuss growth and what that means for the UK. I will, without further ado, introduce my lineup of speakers. To my left, Liam Byrne, MP, and the chair of the Business and Trade Select Committee. Next to him, we've got Louise Hellam, chief economist. Oh, sorry. You swapped. Sorry, we've got, I'll start at the end over there. Wyndham North, Projects Managing Director, Growth Fund of the British Business Bank. And we've got Louise Hellam, Chief Economist at the CBI, then Daisy Cooper, Liberal Democrat, spokesperson for the Treasury and MP. Right, Liam, let's start with you. I think we can't ignore the Trump-sized elephant in the room. We're here to discuss growth. We're here to discuss the latest that the Labour Party has been announcing on growth and economic policies. But, one thing you've said is potentially a 10 to 20% tariff on goods would be a doomsday scenario for the UK economy. You've called for the UK to toughen rules on Chinese investment and export controls. Meanwhile, the Labour Party is pursuing closer ties with China. So do you think your party is kind of taking the wrong approach in that regard?
No, I mean, I think the growth strategy's got like 4 or 5 elements. So the basic ingredients to growth, people, ideas and money, plus investment in infrastructure with a bunch of supply side reforms to make building stuff easier. And then that 5th component is markets. And I think, for some time now, we have moved beyond the era of American hyperpower and hyperglobalization. We're now into a very different geopolitical settlement. And this moment was always going to come, by the way. So, maybe President Trump has accelerated it, but we were always going to get to this point. And so what the UK's got to do now is basically construct this grand bargain where we draw closer to our defence allies. So with the United States, the case that we've got to win is that, look, higher duties means weaker defence. In fact, we've just run this calculation this morning. If you implement 20% tariffs on the UK, that basically offsets your increase in defence spending. So we think that increasing tariffs to 20%, that impact on economic growth probably knocks up to 2 billion off defence spending by 2030, because if you're spending 2.5% of GDP and your GDP is smaller, your defence spending is going to be lower. So there's actually quite a straightforward case to win with President Trump that, if we want stronger defences, then lay off the tariffs. That shouldn't preclude actually the space that we've got to draw closer to Europe. I mean, the cage of red lines that we've got, some of us may not agree with it. I think Daisy and I probably are on the same page with this. But nonetheless, there's still quite a lot to go out there. So an SPS deal on agriculture and agri-foods, for example, that can probably add about 3 billion to GDP in sort of fairly quick time. And then on China, what you got to remember that we're growing exports to China at about 13% a year and have been for a long time. And so what is needed is both a secure and predictable framework. So, I've argued that we need much stronger guardrails around economic security, investment security, export security, which my committee oversees. We need much stronger rules around forced labour. We don't have the equivalent of a Uyghur Forced Labour Act in this country because the pledge that Theresa May made to follow through on modern supply chain security was not implemented. I think Labour should be pursuing that. And then third, we need to get a lot tougher on carbon and just importing our carbon from China. CBAM will deal with that to an extent. It would be a stronger regime if we joined up with the Europeans on this. So I actually think that it's possible for the UK to land in a bit of a sweet spot between the US, Europe and China. But it is going to require us to rethink trade strategy quite quickly.
Okay, that's really interesting. I would love to come back to you on that, and I will, but I'll just get through the other panellists first. So, Daisy, what is the Lib Dem view on this? Do you think we should be moving closer to potentially a US trade deal? Should we be prioritising trade with the EU? And, what's your view of, Labour's been in power now for about 4 months. Are they kind of striking the right approach to growth?
3 easy questions to start with. So let's start with Trump. I think in terms of his impact, it's too early to tell. He's very unpredictable, so is his administration. And the first time round, he said a lot of things and didn't always act on them. So I think we genuinely don't know what's going to happen. We have to be open to a trade deal, but we have to be open to it with our eyes open as well. I think doing a trade deal with the States is very much David and Goliath, and we need to see what the demands on us would be. And they could be quite different. Some things around defence spending, they could be something around farming, there could be something about data privacy and who is allowed to run the internet, for example. So there's a lot of big questions that we just don't know yet what's going to be on the table. So that's a kind of a bit of a watching brief, I think, for now. In terms of what Labour has done, it's very much my view that they've put all of the growth eggs in the building stuff basket, right? They want to build a lot of houses, they want a lot of infrastructure, and there are sort of good reasons for doing that. I think if Trump does come in and quickly does put tariffs in place, that will have a knock-on impact for the cost of materials for construction, and that will then hamper what the government is trying to achieve. So I think there are big risks there. From our point of view, we think there are lots of things the government could be doing to improve growth, whether that's investing in skills, whether that's unleashing small businesses and completely overhauling the business rate system, something which we've been quite critical about in the last few days in particular, but also the last few weeks. And definitely getting a better deal with Europe as well. So we have to remember Europe is our largest market. We have to make that deal work better. We know businesses are wrapped up in red tape, and that should be our number one priority right now as a country.
Okay, great. Louise, let's move on to you. You're here to represent the UK business view. I'd be really interested to know, you had your annual conference last week. Reeve spoke, she said, we probably won't have another tax rising budget again. Did you feel that was enough kind of comfort hearing that at your conference? And do you also have a view from kind of the business perspective on whether we need to be looking more towards the US or more towards the EU, or indeed both, for kind of businesses to succeed in the country?
Yeah, no, definitely. I mean, I think it definitely feels like last week, but yeah, actually it was only Monday and we had Rachel Rachel come along and speak.
This week?
It was this week. Okay. Yeah, I know. It's only like 2 days ago, but it's been quite busy. But yeah, I mean, I think firstly, I mean, it was really great to have Rachel there, and I think it was really important for her to come and speak to the business community, particularly after the budget. And I think that we are very much behind the mission of the government at the moment in terms of promoting growth and investment in the UK. But I think actually, if you're looking at the budget in isolation, the feeling from many of our members, and it is a very strong feeling, is that the budget has made it much more difficult for businesses, particularly when they're thinking about hiring and investing. And that has had real impacts in terms of the decisions that businesses need to make, particularly when they're thinking about their budgets for next year in terms of how many people can they afford to hire, what kind of wage settlements they can give to people, and actually where some people are having to think about, whether they need to restructure their workforce or reduce investment. And I think that that confidence around the strategy for growth and investment has taken a bit of a hit because of that. So I think, we are very much feeding in those messages to government and talking to the Treasury about what is possible to try and restore that confidence. But I think what we definitely need to do is we need to make sure there is a much clearer strategy for growth going forwards, thinking about how we are going to make sure that we're getting investment going. Rachel Reeves made some really great announcements as part of the budget that I don't think we should forget, particularly in terms of that commitment to greater capital spending going forwards. So I think it's about making sure we've got a clear plan of where that investment is going to take place, how that can help crowd in a bit more confidence and a bit more investment from the private sector. But it has made things more difficult, and I think that when we're talking about what the external economic environment might look like going forwards as well, I think again, the budget is coming ahead of some of those concerns about what tariffs could mean for the UK kind of business community as well. So it's again where it feels like both that domestic and that international environment has just become a little bit more difficult.
And Wyndham, from your perspective, British Business Bank wants to scale up homegrown companies. We need kind of confidence. We need, as Louise was saying, confidence around growth in the UK. From your perspective, do you think that is taking a hit by kind of the geopolitical conditions? And was the budget kind of a confidence building event for you?
I think there are always going to be challenges for businesses looking to scale up, but we should remember that the UK is incredibly strong already. So we're fourth globally in terms of creating unicorns. We've got the third strongest venture capital market in the world, 3 of the top 10 universities in the world. And the opportunity to invest in those companies is enormous. And I think what's exciting about it is actually that there's also such untapped potential. So one of the things we're really focused on is, actually I heard your last panel talking about it, is how do you unlock more pension fund investment into this part of the market? Because actually, you know, we have this incredibly strong seed and early stage investment pipeline, but we're not so good at converting that into the big scale-up companies, and many of them end up in the US or overseas. So if we can retain more of that in the UK, that creates jobs, creates innovation, and it's good for the economy overall.
And Louise, we kind of spoke about this before. If we want to kind of scale up companies here, one of the big things that needs promoting is the listing environment. You know, we do see headlines of companies like Klarna very recently suggesting it might initially have listed in London and then actually heading to the US. Well, you know, what feedback are you getting from members about whether the UK is the best place to invest, or whether actually once you scale up it's kind of time to move abroad?
Yeah, so we see that as a big issue in the UK at the moment, and it's a really big concern of our members, particularly those who are already in the FTSE, but also those looking to expand and grow as well. So actually we've set up just over the last couple of months a special project to look at this, and we've got 25 of our kind of biggest CEO members to look at and actually kind of myth bust a little bit of some of the issues in the UK market. So we've been doing a deep dive on that at the moment. I think one of the issues that a lot of people talk about is the valuation between the UK market and the US. I think that is definitely a concern, but there is to some extent that some of those really large US companies are perhaps skewing some of the kind of data on this. So I think it is an issue, but maybe less of an issue than people sometimes focus on. Okay. But what has been really interesting is actually the types of investors in the UK market is often quite fragmented. So in the UK, we've got a lot of investment that is held by multiple kind of small stakes people. So actually what happens when we're talking to UK companies is, have they got the confidence of investors to make really long-term decisions, and perhaps ones that, you know, you really need to have that good discussion between boardrooms and investors to understand the investment strategies, perhaps might involve taking a bit more risk. But where I don't think we're as good in the UK about making some of those really big long-term investments. So I think there is a bit around, you know, what is the right regulation in the UK and have we got that in the right space? But it's also a bit of a kind of cultural discussion as well. And I think those things are sometimes the things that are a lot harder to shift. But it is a big focus for us. So we're doing a lot of that kind of analysis at the moment, and we're looking to come out with some policy recommendations next year. But yeah, particularly within our CEO community, it's something they've actually said we really want to come together. And so within the CBR, we've created a group specifically to do that, because I think it's a really big issue in the UK at the moment.
Yeah, I've noticed you nodding along, so I'd love to hear your thoughts.
Yeah, so I think as part of the issues with listings, some of it is external and out of our control, and some of it is within our control. So Louise has touched on the valuations issue. And I think, you know, with Silicon Valley and other things like that, they've got more expertise, and that's why perhaps some of the valuations, that might be one of the elements why valuations are different. I think the issues here in the UK is we're very good at startups, but it's the scale up that's the problem. And a lot of small companies that then try to scale up, part of that journey is getting a government contract or a contract with a local authority. And I've had this conversation with a number of medtech companies. You know, we've got a very fragmented government system here. So if you've got a fantastic medtech product and you want to roll it out, you can't just speak to the NHS. You have to speak to 40 different integrated care boards. They don't have a harmonised process for bidding or for procurement. And central government doesn't often look at buying things from smaller startups or scale-ups. So there's a real problem there, I think, from government's point of view. And sometimes I think that when they do get those government contracts, there can be problems with the licenses. So if there's intellectual property and the government retains the license on the intellectual property and then tries to sub-license and then sort of sub that out to other competitors, you don't really want to share that information. You don't want to share your IP with the government. So I think there are things that the government could do to become more friendly, to make it more likely that people will scale up here. But there are some external issues as well.
And Liam, as the Labour Party representative here, do you hear that there are changes perhaps the government needs to make in order to help companies scale up better?
I don't know about that, but if you look back, there are two problems here, right? So one is market size, and the other is liquidity size. So if you look back to one of the last truly global companies that has been created from scratch in this country is Arm. And I wrote a book a few years ago called Dragons, which is a story of our economic history through 10 great entrepreneurs. And one of the really striking things is that we are a country that is built by extraordinary entrepreneurs who made history by inventing the future. But we haven't had that kind of abundance of great global entrepreneurs since the war that perhaps we have over the past centuries. Arm is an exception, but when you talk to the founders of Arm, they set it out to be a global company from the very beginning. And of course, what that meant is that they were setting up from the beginning supplies, businesses, marketing operations in big markets. And the UK is a small market. And that's why, Daisy's right to kind of underline the point about tighter integration with Europe. It's kind of next door. It's really big. Okay, it's not growing super fast, but it is growing.
Yeah.
And it's going to get bigger as expansion drives out to the east. So, the UK has got to create that kind of bigger global trading environment, and we've got to be a place from which you can build businesses globally. But second, the truth is that the London Stock Exchange just doesn't have the depth of liquidity that the New York Stock Exchange now has. And, it's in a kind of a pickle in a way, because the scale of liquidity in New York now means that they're able to build just stovepipes of technical excellence that are driving better assessments of valuation than I fear we have available in London, which is why you have on the investor side, you've got to consolidate this kind of crazy 3,500 different pension funds into a much tighter, smaller handful of super funds like Canada, like Australia, that are just better able to be intelligent stewards. At the moment, we've got a lot of funds. They follow market, but modern portfolio theory. They're putting eggs in all sorts of baskets, and they're not looking after the eggs. And so you've got a problem of increasingly blind stewards and captains in boardrooms who aren't necessarily focused on the long term. They're too focused on the short term. So we've got to shift our entrepreneurial environment onto a new equilibrium, bigger markets into which to sell, and a bigger investment market from which you draw the liquidity.
Okay, yeah, and this refers to Rachel Reeves' kind of landmark Mansion House announcement, which was to consolidate all these pensions to create these mega funds, like you say, to kind of to mirror what Australia and what Canada are doing. Wyndham, I'm curious to hear from you what that kind of looks like as an investor. Is that, does that really kind of help, again, companies to receive more funding, to help grow the economy?
Yeah, I mean, to build on the point that Liam was making, actually, I think that although you can trace a lot of the challenges in the listing market in the UK to the listing regime itself, but there's also the stage before that, which is the scale-up end of the private markets. And if you're not getting the UK investment in at that stage, if you're getting a table of international investors who are then guiding that company and saying, actually, you should list in New York, or we'll keep you private in the US, that's where you also get that drag away from the UK. And to your question, consolidation will be undoubtedly kind of important because it gives the pension funds that scale to make those investments. But I think the government also recognises that by itself it's not going to be the answer. And we've spoken, I mean, the work that we're doing is to set up an investment vehicle to try and catalyse pension fund investment into UK companies. We've spoken to dozens of pension funds over the last year, and you hear the challenges are beyond just scale. It's about the fee dynamics and regulations, and so you need a holistic solution. But if you can get it right, and it's really a perfect match because you've got long-term investors who can wait for value, but also who have an interest in the sort of society they retire into. And so if you are backing companies that are doing great research around cancer treatments or using AI to solve challenges around, I don't know, financial crime, whatever it is, it's such a win-win for pension savers as well. So it's exciting as well as challenging.
Okay, and you mentioned some potential regulatory barriers there. Is there anything you would cite in particular?
Without going sort of too deep down the regulatory rabbit hole, I mean, there are sort of challenges around the fiduciary duties that trustees have on pension, for pension funds, where what can they take into account in making decisions. There's challenges particularly around, and the government's actually made progress on this, but around sort of the charges that you can play into it. Again, you can solve those, but if the culture, I mean, actually Louise was saying, if the culture doesn't change as well, and you've got basically a race to the bottom on fees, then that's what you need to address. You need to be willing to pay. Venture capital is an expensive asset class. You're sourcing deals, you're sitting on boards, you're helping companies grow. But the returns can be really worth it, both in pure financial terms and in wider benefits. And recognising that in the regulations, but also culturally, I think is how you start to unlock that. And we're seeing some movement now. I mean, we saw at the budget, the Chancellor announced we've received statements from Aegon UK and from NatWest Cushion, who are working with us on the launch of our product and who, with a view to making an investment. We're backing, we're investing in work that Phoenix and Schroders are doing. So you are seeing progress now, but it's how do you unlock that? I mean, there are £1 trillion in DC and LGPS pensions alone in the UK. It's a huge pool of capital that can be unlocked.
Louise, I'd love to hear your view on that from kind of a company perspective. What more needs to be done?
Yeah, I mean, I just agree with what Wyndham said, really. I mean, I think that all of this needs to be done quite thoughtfully, but I think everybody can see the potential prize on this if you get it right, and particularly where, you know, there is a lot of assets in some of those pension funds, and we know that within the UK we need that investment. So it is exactly as you said about making sure how can we make sure this is a win-win and kind of you're bringing prosperity to all of the UK as well. So I think, you know, we're really keen to continue working with the government and working with British Business Bank, make sure businesses are feeding into that conversation. But if we can get this right, then it should be really beneficial and help to really deepen that capital pool that we need in the UK.
Daisy, do you have some comments?
Yeah, sure. I find this really curious. I think a lot of people say they're very frustrated that pensions aren't investing in British projects. And then you say, well, do you think the pension funds are run badly? And they say, no, they're run incredibly well and we're getting good returns, they're good projects. So it then raises the question, well, why aren't pension funds investing in Britain? So it's a different kind of way of coming at the question. And I think there's sort of two reasons for this. One is that actually there hasn't been a long-term industrial strategy setting out long-term infrastructure projects that pension funds can invest in. And I think when the government comes out with its strategy in sort of springtime, as we expect, hopefully that will unlock some of the opportunities for investment. And, you know, I think the move towards super funds generally on the whole welcome. I'm struck by the fact that the question seems to be, and the debate seems to be about whether we should be accepting more risk or whether we should have less risk, and not about who carries the risk and how we can de-risk. And I think, you know, if you are, for example, a woman over 50, and you're one of the 25% of women over 50 whose entire pension pot is £5,000, then you don't want to have more risk around your pension. And I think when you look at other countries, not only have they had scale in terms of the pension, but they've de-risked some of the pension by providing a bit of a backstop, particularly for some of the smaller pensions. So I think it's important we don't talk about just the level of risk, but also who is holding that risk as well.
Yeah, really interesting point. And you mentioned at the beginning, you know, questions around why UK pension funds or pension funds aren't investing in the UK directly. And, you know, Pensions Minister Emma Reynolds is undertaking this review at the moment, and there has been quite a lot of discussion about whether there should be a mandate for pension funds to invest in the UK. You know, the companies, unsurprisingly, are pushing back on that. They don't want to be told where to invest. They say that, you know, where they invest is best for their savers, and, you know, just because that's in the UK doesn't necessarily mean it's the right option. Do you think there should be a mandate?
Ah, goodness. So, it's a classic kind of yes and no kind of answer.
Okay.
So, I think fundamentally people want pensions to get people want what's that? Oh, steady on, you're the one doing the cross-party working. So I think fundamentally people want a good return on their pensions. And if they're being mandated to invest in something that they think is not going to give them a good return, or something that is more risky, then obviously they're not going to like that. So I think you have to use sticks and carrots. On the other hand, we do need to incentivise people to invest in Britain. I would much rather that we use incentives first before mandating. But fundamentally, if a pension's getting pensions advice, and the pensions advice is don't invest in this project, don't invest in this country, well, actually, pensions aren't going to do anything differently unless that advice changes. So I'd rather we had incentives first and we had the right sort of architecture around investment, so that there were really good opportunities. I think mandation is something that you can do as part of the package, but fundamentally you want to incentivise it so people are getting a good return. Reducing people's return on their pensions just so that you can invest seems to me to not be achieving the overall end.
Yeah.
But I think the debate on the mandate has got to go wider than this. I agree with a lot of what Daisy says, but of the 2 trillion that we collectively invest in pension assets, very few people in this room know whether you're investing in companies that are poisoning the planet, dodging their taxes, or screwing their workers. And one of the opportunities that we get through consolidating these funds is that we can have a new debate now about how we create transparency from pension savers through to what funds are investing in, which is why the point about fiduciary duty is so critically important. And Nest in particular have just pioneered some really good advances in stewardship codes. Good Business Charter, is another organisation that has actually set out, just here are 10 things which good companies should be doing. And the research that we've done with the All-Party Group on inclusive growth shows that 2/3 of pension savers would accept a slightly lower return if they were actually confident, if they had the confidence that they were investing in virtue and not vice.
Okay.
And so, if you think about what's happening next year, we've got a pensions bill that's going to help consolidate funds, and we've got the corporate governance and audit reform bill that is coming too. There is actually the opportunity to put the UK capitalism on a different equilibrium that looks much more like a civic capitalism, where you've got investors who are doing the right thing and where you've got boards that are doing the right thing. And that's a really exciting opportunity that is remarkably under-debated at the moment.
Well, does anyone want to come in on that? I've got some questions flooding in on Slido, but does anyone want to come in on that before I...
Well, I think just briefly, just in terms of the mandation points, I mean, I think similar to what I said, I don't think that is something that we would support. It's more that bigger challenge, actually, of thinking about, well, if this investment isn't coming to the UK, why is that? And about actually uplifting the level of growth and particularly productivity that is happening in the UK. And I think that is obviously the big prize when you're kind of stepping back and looking at the bigger picture on this. And I think where all of these issues are really important, but actually it's about that collective. So it's everything that we're doing in terms of the financial services. How does that piece fit into the wider industrial strategy, fits into the wider growth strategy? And I think that's where we are seeing a lot of these discussions now happening in the UK, and I think hopefully a lot of policy that is coming down the line. But these are all very complex things, right? So it's about, have we got the right groups of people who are feeding into these conversations? Are we mapping them out so people are clear on that bigger kind of vision and strategy? And again, particularly from the business perspective, then they have got that confidence that some of these reforms, especially if they are longer term, that they are coming down the track, and you're kind of telling people that story and that narrative around how we have got a greater vision for growth and investment in the UK.
Just to add a tiny little coda on that, I think there's a much bigger piece about how you democratise these decisions as well. I think on an individual level, we're so used to having everything on our phone. We move money around into different accounts, for different sort of interest rates and things. But actually, very few people engage with their pensions. And I think many people, if you gave somebody the ability to say, actually, I would like to invest in upgrading my local railway line, and I'm prepared to take a lower level to do that, because I can see that there's a benefit to my community. Yes, I want to invest some of my pension in high street regeneration. Actually, there is a much bigger question about how we democratise the use of pensions and investment funds as well.
And the Chileans gave us a good model. I mean, when the Chilean pension fund reform came through, it was much clearer to be able to invest in high risk, medium risk and low risk. You could kind of choose that sort of ABC-like options. And actually, we should be trying to create similar kind of frameworks to just simplify how you can invest in virtue rather than vice. Because actually the returns across the piece wouldn't be that much different. Yeah,
and I think it also shouldn't come down to a question of, do you want to have returns or do you want to invest in the UK and make good investments? I mean, if you look back over the last 5 years, actually, if you're able to tap into the best investment opportunities in, let's say, venture capital, those returns, looking backwards, I should emphasise, and without making financial promotions, they would outstrip other listed asset classes, infrastructure, even private equity. So if you can get it right, you can drive returns that justify the investment, even aside from the societal or wider benefits or economic benefits to the UK. But to your point, Daisy, as well about risk, this has got to be part of a balanced portfolio at any point, and it has to be a choice that you make depending on your stage of life and retire and how far you are from retirement. You're absolutely right that you don't want people, 5-10 years out putting all their money into higher risk assets. But if it's longer term, diversified at scale, then it can be a really sensible way to go forward. And
we shouldn't forget what's about to happen with auto enrolment. I mean, the fact that we have so many, 16 million pension savers now. Yeah. When you just do a simple model of how much is going to go into that pension savings market, put a traditional glide path on it, you can see there's potentially £500 billion that is going to go into equity investment over the next 5 to 10 years. That is a really significant lever to help put our economy on a better growth path for the future.
Right, I'm going to take some questions from Slido, and just a reminder to everyone, please feel free to get more in. We've got quite a lot already. I'm going to go for the one that's been sitting here the longest, from Vincenzo at WPI Strategy. Taking the global landscape that Liam set out, what is the most attractive pitch of the UK around the world, given we're seen as a mid-sized market sitting between two huge markets? That's not an easy one. Do you want to take that?
No, I think it's pretty straightforward, actually. So, one, we have some of the best universities in the world. Secondly, we are just one of the greatest places to invent and innovate. This is a country that's been burying its scientists with its sovereigns since we buried Isaac Newton. So this is a great place to innovate, and it's underpinned by a pretty substantial pool of long-term savings, and it has got access to global markets, and it's, dare I say, it's got a politics that is not quite as volatile as politics elsewhere. Now, that does require us actually to fix this yawning inequality of wealth that bedevils our country, because that is a license for populism in the future. But, right now, I think we would say that the centre ground of politics is kind of held at the moment. We haven't got the kind of problems that you're seeing in France, potentially with the rise of the AfD in Germany, nor necessarily the political outcomes we've just seen in the United States. So.
Well, sticking with the US, I mean, I do have to ask, because we haven't specifically touched on things like trade deals, but, referencing this question, is that something we need to prioritise with the US and with the EU? And, would we have to compromise on things like agricultural standards, particularly if we were to push for a kind of a US trade deal?
So so President Trump likes the UK, and he likes doing deals. And so, the opportunity for a trade deal with the UK has gone up. When you talk to people in Congress, however, and Congress is important for trade deals, they're not interested in a sector-by-sector deal. They're interested in a grand bargain because they've got agricultural interests to put forward. That will be supremely difficult for the UK. And if you think the farmers' protests that we've had last week were tricky, that's like a teddy bear's picnic compared to what would be the case if we had a trade deal on agriculture, because our market would be flooded with hormone-fed beef and chlorinated chicken that would all be at a dramatic lower cost. That would be really challenging, I think, which is why Rishi Sunak didn't pursue it, by the way. And so I think there are things that we can do around economic security, around defence investment, around digital, potentially around financial services. But the reality is that trade between the US and the UK is pretty friction-free at the moment. And when I took the select committee to Washington and New York in the summer, actually the big message from the business community, if you don't mind my language, was just, can you just please not fuck this up? Just because actually it's kind of going okay at the moment. Right. Just please don't be terribly disruptive. So, we've got to make sure that we avoid tariffs. We've got to, keep making progress in terms of trade closeness to each other. But actually, a free trade deal doesn't give you a gigantic new advantage that we don't have today.
Okay.
Whereas closer ties with Europe definitely do, particularly for Daisy's point about smaller investors who have taken a real hammering. And for those who have not seen Johnny Reynolds' evidence to the committee on Tuesday, it's worth looking at what he said about his goals for the trade strategy, because one of the big things that he does want to commit to is a growing number of smaller exporters. Most of those exporters are exporters to Europe, would be my guess.
Yep. Yeah. Louise, is that the message from your business community as well? Don't things are going well, don't screw it up.
Yeah, I mean, I definitely, in terms of what we're talking to them about, it's a lot more of just concerns about some of the ways in which some of those risks could increase, particularly when you're thinking about tariffs and trade and things like that. Actually, in terms of deepening some of the opportunities, I think, you know, US is an important market, but to Liam's point, it's actually looking more towards the EU. And I think there's a lot of people that have got in their minds that we've got the renegotiation of the trade cooperation agreement coming up in 2026. So a lot of discussions over the next year about what could be the kind of opportunities there in the next phase of that. So I think in terms of if you're looking for opportunities, that is something that hopefully is on the horizon. And I think, again, particularly this point on, we have seen a big fall off in exports, particularly for smaller companies in the UK. So actually, if we can give them, again, confidence and make it easier for them to think about increasing their exports, and we know, again, that's great for making sure that we have got competitive businesses in the UK, that, again, they're thinking about raising their game in terms of productivity and things as well. I think that is an area that, you know, many businesses in the UK are really interested in.
One small sort of political observation, which I think often goes overlooked, is that we're going to have the same government in Britain for the same duration of Trump's presidency. And we can't overlook that, because that actually gives us some stability. So whatever you think of the government, whatever your politics are, that does give us a level of stability, which I think is a good thing.
Really interesting point. Right, I'll take another question from the floor, and hands up who wants to answer this. But what sectors does the Labour government view as priorities to power UK exports to China, and what will it do to support them? I don't want to pick on you, Liam, but I think I'll have to.
Well, the sectors where we have comparative advantages are listed out in the industrial strategy, and there's a lively debate going on as to whether that is the right focus for industrial strategy. So basically, there are kind of three questions with industrial strategy. So, one, have we got the sectors that have been picked in the right way? Two, what do you do about diffusing productivity gains throughout the economy? So it was actually Rain's point on Monday about, you know, do you pick races rather than pick sectors? And third, we used to talk a lot about the everyday economy, which is the, you know, non-domestically traded, where productivity growth is low, but they're systemically important employers. You can't raise wages unless you raise productivity. How do you do that? So there are some big questions there. But the kind of sectors that were listed there are kind of the priority sectors for exports to China. So financial services, advanced manufacturing. You know, those are big growth markets in China. You know, the third plenum met over the summer. You know, we've had the return of language around reform and opening up. Chinese policymakers tell a good story now about their goal of creating a market economy. They're, you know, sending new positive vibes about you know, their appetite for deeper market investment from sophisticated market leaders. You know, I think actually most European firms and most Western chambers of commerce in China will tell you the reality is a long way different from that rhetoric. So the rhetoric reality gap is pretty significant. But it is, you know, it is just remarkable when you look at what has happened to exports to China. I mean, generally speaking, when the political environment gets worse, trade growth goes up.
Right.
It's a fairly persistent sort of 12 to 13% a year growth in exports at the moment. But if you're to make that trade more predictable in the future, my argument is you've just got to put stronger guardrails around economic security, labour standards and carbon.
Okay. Anyone else want to come in on that before I grab another question from the floor?
And my only observation would be that, I mean, during coalition years, Vince Cable set out, I think, about sort of 9 to 11 areas, and they were really quite similar to the ones that the Labour government have now outlined in theirs.
Vince had a lot
and they were all high growth areas, and at the time that was really broadly welcomed. So, I mean, there seems to be quite a lot of overlap in that area. Some of the areas are slightly different, but broadly speaking, they were.
And actually, Greg Clark, to be fair to him, listed a pretty similar set of sectors. So I think, you know.
Yeah, so I think it's really positive that we've got an industrial strategy now, and I think, like you say, I think even before it was written, you got a relative amount of predictability about what some of those sectors are. So it's now about really making sure, can we set out what is the detail behind that, and really working with businesses in those industries to make sure we have got really clear kind of strategies, we've got the right kind of capital arrangements around them, etc., to make sure that they can invest. But I think importantly, to Liam's point as well, is that whilst you see the possibilities for those sectors, we're not leaving everybody else behind, right? And you're thinking about actually how do you create the right environment in the UK for every type of business? And that's where, you know, you're thinking about you've got the right regulatory environment. And again, really great messages from Kira about thinking about how we make sure that that can lean into more innovation in that space. You're getting the right tax framework. And, you know, we've touched on some of the perhaps challenges in the budget, but actually setting out the corporation tax roadmap again, very positive for many businesses in that space as well. So I think it's important to definitely focus on those sectors, but think about how we're making it easy for every business across the UK as well.
And there's a really interesting question here that I'd like to get to. So given the evidence, this is from Simon Ewell, given the evidence showing that beyond a certain point, financial services growth harms GDP, is there not a risk that the government strategy to grow financial services undermines its wider growth mission? This is a really interesting point because, you know, the argument from the regulators, the PRA and the FCA, is that competitiveness equals good financial regulation. That if you lessen financial regulation too much, if you loosen it, you allow firms to grow exponentially, but actually it will end up costing more if there's another crisis or something like that.
100%.
Anyone have any thoughts on that? I don't want to pick on anyone for this one.
Well, I mean, just having gone through the last financial crisis and then, you know, having been the chief secretary, had to kind of clear it up afterwards. I mean, the key book here is Carmen Reinhardt and Ken Rogoff. This time it's different, and you know that makes kind of two important points that bear remembering. One, you know, we've had about 40 financial crises since the Napoleonic War. We haven't graduated from a world where there are financial crises. And second, every period of financial crisis has been preceded by a period of financial deregulation. So you have to be incredibly careful about getting this balance right.
Just to add to, I think there was a parliamentary commission on financial banking, or parliamentary commission on banking, which I think came to the conclusion that strong regulation actually improves economic growth because it provides the stability to attract more businesses to come here. So I think deregulation is not the way to go. There does need to be a conversation about smarter regulation and how you make sure that your regulators are properly resourced so they can make decisions quickly, so they have enough market expertise. And I think that's the conversation we need to be having, rather than whether it's more or less regulation. It's how do you get the right regulation and how do you resource the regulator to be strong and effective and quick and agile.
Yeah, I think I just really agree with that in terms of it really is about that focus on smart regulation, actually what the kind of outcomes-based regulation that you need to see. So I think that you need to make sure you've got that balance. And I think, again, hopefully that pitch from Rachel Rees in Mansion House was right about actually thinking, can we take on perhaps a little bit more risk, think about how we can incentivise the innovation, but you need to make sure you've still got that right balance as well.
Okay, great. Well, we're almost out of time, so I'm just going to throw one more question to Wyndham. So should the government do more to link UK growth and investment in general with green UK growth and investment? So I wonder from your perspective whether, you know, enough is being done on kind of sustainable finance and investment. Is there enough of a focus on companies that are green or growing to become green?
I think the government's doing a huge amount in that space, and the creation of the National Wealth Fund is a huge step there, which is, you know, we'll be investing in both infrastructure and green projects across the UK. And in many ways, they'll be doing what the British Business Bank has done for the last 10 years, which is to use that government capital and government balance sheet to leverage in private investment into those areas. And we've done that at a ratio of over 2.5 to 1, private to public. And we'll be supporting the National Wealth Fund to do the same. So I think the government's doing a lot in that space. We're also focused on the right sort of products to get access to finance on green issues. So always more to do, but I think there's a lot of focus on it as I see it at the moment.
Yeah, and I think just on that as well, I think that's in terms of thinking about where the UK can be a world leader. I think that's really where we're leading the charge on some of this thinking. So that's really positive to see.
Yeah. Just briefly, I mean, during coalition years, you know, we Liberal Democrats were key in setting up the Green Investment Bank. Unfortunately, that was scrapped. If it hadn't have been scrapped, maybe we'd be in a better position now with cheaper energy bills and more renewable energy. And so that's something that we were very proud of. But I think anything that the government can do in that space would be very welcome.
And setting up the British Business Bank as well, which I've already thanked you.
Exactly. You're welcome.
Liam, do you want to have the last word before we finish?
No, I think it's all been said.
Okay, perfect. All right, well, I think we are now standing between you all and lunch, so I will just say thank you very much to the panellists. I think it's been a really, really interesting debate, and obviously there is a lot to watch out for in the coming weeks and months. So, yes, thank you. Please enjoy lunch, which is happening through there, and be back here for 2:30, where I will be interviewing Tulip Steek City Minister. So thank you very much.